Of course, one of our visions is also that on mid to long term, we can bring the banks closer to the digital asset ecosystem so that they can also start building their products and services based on stablecoins. We believe that stablecoin is actually one of the pillars here of this European payment autonomy. We need to have an answer to the rising dominance of the US dollar stablecoins. And here, if you look at just the global stablecoin market, probably 99.8% or 7% is US dollar denominated. However, I think that a lot of the activity will actually be on public blockchains.
Such as?
Such as Ethereum, Polygon.
What does it take to bring Europe's first multi-bank stablecoin to life? And what could it mean for the future of payments on the continent? Today, I'm joined by Vid Hribar. He has spent the past several years at RBI driving strategy and R&D efforts around blockchain and distributed ledger technologies. He led initiatives that explore tokenized assets, stablecoins, and digital money innovation across Europe. This episode is all about the European Euro Stablecoin Initiative, which is a new consortium of 9 major banks building a MiCAR-compliant stablecoin to strengthen Europe's digital financial infrastructure. Thank you for joining me today.
Hi, good morning. Nice to be here.
Vid, take us back to the beginning. You started at RBI as a credit officer, and now you are one of the people who are leading strategic partnerships and ecosystems at RBI with a focus on blockchain innovation. What drew you into the world of digital assets? Why crypto?
Yeah. So as you rightfully said, I joined RBI a couple of years ago, joined as a credit officer, so worked more in the operations, but then quite quickly moved more to this group strategy innovation parts, because this is just the part that kind of attracted me more. But maybe to take a step back also in my career, I have a legal background. I studied law, I finished law. I originally come from Slovenia, so this was kind of my primary base. I did a couple of exchanges, and I still remember actually one class about cryptocurrencies that was already years ago, back in, I believe, 2016. And back then I looked at crypto and blockchain from a very different perspective. So coming from a legal background, so you have a room full of lawyers, and of course, when somebody presents something about cryptocurrencies, the first thing that they will see is that this is not regulated, that there are major risks there in terms of compliance, IT, and so on. So my first interaction with crypto was actually very interesting, but very also skeptical. But then when I started reading more about it and when I got into the space, of course, my perception also changed. So then after I finished the law faculty, I joined RBI as a credit officer. First, I worked in operations. This kind of was a good fit to my profile, especially to the legal background, because we were there preparing the agreements for corporates when they were trying to get a loan. So structuring these credit facilities, credit agreements, and kind of orchestrating all the parties from relationship manager on one side to risk colleagues, operations colleagues, and also legal colleagues. So really being the bridge between all of these parties. And I learned there a lot. But even back then, my passions, which is blockchain, also kind of was bubbling inside of me. And I started going to a lot of these blockchain events here around Vienna. And quite quickly, I actually realized, so somebody else told me, that RBI has a blockchain hub. And back then, I was surprised, even shocked, that somebody in RBI, in the bank that I work, is dealing with blockchain. And of course, I reached out to this guy. His name was Stefan Angelic. He later on left RBI. But when he left, I also applied for this job, and it was quite a smooth process then of onboarding me. And for the last couple of years, as you said, I've been dealing mostly in this intersection between blockchain and payments. So working with, on one side, with the digital euro, but also on the wholesale CBDC, and with a special focus on stablecoins.
All right. Let's talk about the consortium, right? The consortium itself. There are 9 banks, including RBI, ING, UniCredit, and some of the others. They have all come together to issue a MiCAR-compliant euro or stablecoin. How did this collaboration even come about, and what unites these banks, right?
Yeah. So in September, we announced our plans that we are 9 banks that are planning to issue a euro stablecoin. We are an open consortium, so the number of banks will definitely still grow in the future. But currently we're 9, and this announcement was in September. And I have to say that this has not started actually this year, or this is not something very new, because we started the project actually 3 years ago. So back then the environment was completely different. The stablecoin market cap was around $130 billion, so much lower. Also, when it comes to the regulation was not there yet. So it was still unregulated space. So the market environment was completely different. Nevertheless, it was 4 banks that decided to join forces, and even back then tried to assess whether there's an opportunity for banks to come together and to jointly issue a euro stablecoin. And on one side, we assessed the business elements. So what are the use cases? What is the business case for this new entity? On the other side, the tech elements. So what is actually the infrastructure that we need, and who are the vendors that can help us with this? And thirdly, a lot of the analysis was done on the legal, risk, and regulatory side in order to be in line with all the, on one side, regulations, but on the other side also with the authorities. And the results of this initiative were positive. So we saw that there's a potential for us to join forces. But back then we were only 4. And we knew that if we want to succeed, if we want to kind of achieve this power on the market, we need to have more banks on board. And that's why we also decided to grow the consortium. Currently we're 9, but I believe that the consortium will still grow in the future. So our goal is, or a joint vision is, to build and develop a trusted and regulated means of on-chain payment and settlement in euros that will support the development of a bigger ecosystem. So this is not going to be let's say, a closed loop system. So this new entity will definitely also serve third parties such as crypto exchanges, fintechs, payment service providers. But of course, one of our visions is also that on mid to long term, we can bring the banks closer to the digital asset ecosystem so that they can also start building their products and services based on stablecoins. So this entity that has been founded already is now kind of a bridge between the crypto world and the banking world. And we definitely want to share the insights in both directions.
Very interesting. But what differentiates a multi-bank regulated euro or European approach from previous attempts, right, to realize something similar in the crypto or fintech world? Like, what makes this initiative actually unique?
Yeah. So let me first answer the first part of the question. Why this why did we decide that multiple banks will come together and jointly issue a stablecoin? In RBI, we started piloting a stablecoin back in 2021. So it was a pilot project together with a British, Polish fintech. And back then we issued a euro stablecoin. And the plan was there to also compare how stablecoin transactions are kind of performing in comparison to the usual cross-border payment flows. So we were sending from RBI head office money to one of our network banks. They were sending it back. So once this was done with a stablecoin, and once it was done with the traditional payment rules, and we were comparing this. And the second thing that we did with this stablecoin was we issued on one side the tokenized fund share, and we issued a stablecoin, and then we swapped these assets and kind of settled this transaction. What we learned from that is that on one side, from the tech perspective, it's not rocket science to issue a stablecoin. Of course, it's not easy. and you do have to build the infrastructure for that. But on the other side, it's not something that would kind of hold us back from issuing the stablecoin. The second thing that we learned back in 2021 is that we need regulation, we need regulatory clarity if we want to issue a stablecoin. And now with MiCA, this is definitely easier. And the third thing that we learned is that if we issue a stablecoin, and if every bank issues their stablecoin, the market will be very fragmented. And you will need to find then a solution how to interoperate with these different stablecoins. So this is something that we knew from the beginning that is, in our perspective, not the right approach. Mm-hmm. And that's why we decided to kind of join forces with the other banks to issue just one stablecoin that we believe can become a market standard here. So from this perspective, this is to the joint issuance. Mm-hmm. And how are we different from the others? On one side, I do see that now with the regulation, the core of every stablecoin that is regulated is practically the same. So MiCA doesn't give you much of a leeway to, create something completely different or to innovate on this side. So from this perspective, the space is getting a bit commoditized, but still what we hear also from our clients is that trust is still a very important thing here. So when we're talking to the corporate clients, especially, they would not like to trust, let's say, a fintech issued stablecoin, mm-hmm. or their trust would definitely be lower because there is a certain risk that not everything is done according to either the regulations or that there's not enough reserves, for example, there when you want to redeem the stablecoin. So trust is a big thing in the industry, especially when it comes to mass adoption. And we believe that here banks still have the trust, even though, sometimes when we talk about innovation, banks are maybe not the first one. Their banks are a bit slower than the general fintech industry, but what we do well and what we do have is definitely the trust of our customers. So bringing this trust into the space is something that we believe will also lead to mass adoption. And secondly, I think it's interesting also to see how the models of stablecoin issuers developed, because at the beginning it was, let's say, Tether and Circle. Fintech issued stablecoins, so they issued a stablecoin, listed it on different exchanges, now entering into partnerships with different payment service providers and so on. So they issued a stablecoin and then they tried to find a distribution network. We are approaching this from a different perspective. So we're a group of banks. We have our client relationship. We have the distribution network. And as the second step, now we're issuing a stablecoin. So we believe that we do have a big base of potential clients. With 9 banks now in the consortium, we have a base of more than 100 million potential clients for the stablecoin. So again, this is something where we see that, the industry is coming from one perspective, and now we're trying to tackle this problem from a different perspective. So this is also definitely something that's important. And the third element that I would also mention here is the European strategic payment autonomy. Mm-hmm. So for a long time, we had, these discussions that Europe on one side has to get more competitive if we want to compete with US, with China, with other regions and countries. On the other side, we are also, at least in some aspects, very reliant on non-European providers when it comes to payments, when it comes to card networks. There, we all identify that there's a big kind of dependence on the non-European providers. So from this perspective, and now especially with these geopolitical tensions, probably you saw that US is explicitly saying that they want to be the leader in digital assets. So global leader in digital assets, and they're promoting stablecoins quite heavily. So from this perspective, I also see that it's time for Europe to do something. But on the other side, this is not something that, we should just say people in Brussels should do something in order to ensure this autonomy, we see that this is also partially our responsibility to build the payment autonomy. And we believe that stablecoin is actually one of the pillars here of this European payment autonomy.
So basically doing it in 2025 was a strategic decision from regulatory, technological, and geopolitical perspective, right? That's why we are seeing this happening exactly in 2025.
Exactly. I think this is a really good mixture. I mean, this year is the first year that I actually got a lot of interest also in stablecoins from my business colleagues. And as you said, I think this is a mixture of, on one side, regulation, because banks usually don't operate in non-regulated environments. They do want full regulatory clarity, so MiCA definitely helps here, even though it might not be perfect, but still it's a good basis framework that we can build on. Secondly, then also when it comes to the technology, I believe that the technology has advanced a lot in the last couple of years, and that we're not talking about certain problems that blockchains maybe had a couple of years ago in terms of scalability. Privacy is still an issue, but a lot of smart people are working on this. So I believe that this will also, sooner or later, the solution will appear there.
I think awareness and education as well, right? Even, as you said, 2-3 years ago, it was still something mysterious in a way for the vast majority of people, even in the crypto industry, right? We're talking about the beginners and so on.
Exactly.
Yeah.
And this is also how we started a couple of years ago. I mean, it was a lot of education, a lot of presentations, a lot of repetition also. But at the end of the day, this really, it takes time.
Consistency builds a skill. Right?
Exactly.
Yeah.
Exactly.
And geopolitical situation, right? This is crucially important right now to stay autonomous, I guess.
Exactly.
Yeah.
This, and what I will also mention, why is now a good moment for stablecoins, because for first time, stablecoins are growing beyond just crypto and DeFi ecosystem. So this was the first use case for stablecoins. Then, of course, there was the use case of store of value for emerging markets. People wanted exposure in US dollars because they didn't want to hold or save in their, let's say, local currency due to inflation. And now we finally see that also the stablecoins are slowly moving also into the payment space more and more. So especially cross-border payments. And I think that then the next use case is also going to be this, when more and more assets are tokenized, the settlement of tokenized assets. So it's not, purely crypto anymore, but actually stablecoins are slowly coming into the field where banks are active. And this is also a bit of a tension there. Can we lose some business? Are there some opportunities for us? And these are kind of the thoughts, how banks think.
Some people describe stablecoins, or the stablecoin, it's in general, as a digitalized cash on blockchain. Can you relate to this vision? And if yes, then what makes it this different from existing payment rails, now that we have mentioned them, or other stablecoins on the market?
So I do agree with this definition, and I think that stablecoins are actually the money of the internet. But we also have to know that what we have now with stablecoins is not something completely new. When it comes to this regulated stablecoins, at least in Europe, they are regulated as e-money token. And e-money is something that we knew even before. So if you open your PayPal wallet, you saw your money there. And this was e-money. However, this e-money was always confined into the ecosystem of the issuer. So you couldn't transfer this e-money outside of this ecosystem. Now with stablecoin, this is possible. But not only that, you can do transactions instantaneously, globally, 24/7. And one of the important parts there is also the programmability element. So it can support programmable applications with the help of smart contracts, of course. How is this different from the existing, let's say, payment systems? I mean, here In Europe, we are very lucky actually because all our payment systems work really well. So you can send your money to your friend in Germany or Portugal instantaneously with low or even no cost. So when it comes to these payments in Europe, in the SEPA area, we believe that there's not a market failure. But if you look at the other markets, and especially when it comes to cross-border payments, so going beyond borders of a certain region or a country, then you can see that the costs start to rise. Mm-hmm. The payments get slower because you also need some intermediaries, and they are often also untransparent. Mm-hmm. So sometimes you don't know actually where the money is. And with stablecoins, this is something that you can easily track actually. So from this perspective, I believe that, when it comes to the traditional payment systems, there are certain parts that we might be able to fix also with stablecoins, but especially when it goes to cross-border payments or programmable payments, I think these are actually the opportunities and not, let's say, daily spending use cases here in Europe.
Europe's response to US-dominated stablecoins is a big theme. How do you see this project contributing to Europe's strategic autonomy in payments and finance?
So as said, the US here has a clear goal to be the leader in digital assets. And from this perspective, they are also trying to promote the stablecoins because on the other side, stablecoins are also indirectly refinancing their national debt if they're US dollar denominated. And Europe started to feel these pressures already a while ago, but I think that now we're finally coming to the time when it's on everybody's agenda, on everybody's list, that we need to do something, that the time is now. And that's why we also believe that we have to be autonomous, we have to build our own payment rails, and a lot of these things have been built already, but also in terms of the blockchain and in terms of stablecoins, we need to have an answer to the rising dominance of the US dollar stablecoins. And here, if you look at just the global stablecoin market, probably 99.8% or 7% is US dollar denominated, 0.2 is euro denominated, and then there are some other currencies, but definitely the market cap of the other currency is way lower. But if we look at the general, let's say, payment flows or international trade, you will see that still US dollar has the biggest share, but euro share of this international trade is around 20%, based on different reports. But it is around 20%. And here, if we compare now the international payment flows in euros and then the market cap of euro stablecoins, I mean, there's a big difference, 0.2 versus 20. So we see this on one side as an opportunity, but on the other side also as a defensive move, because US dollar, and if we believe that these payment flows will be done in stablecoins in the future, US dollar could increase their dominance also and reduce the euro share of international payment flow. So from this perspective, I think it's important for us all to act on this, and we see euro stablecoin as kind of the one of the pillars of this strategic autonomy.
You mentioned that US-denominated stablecoins stablecoins, they are backed by treasuries, right? Not fully, but considerably. What about the euro-denominated stablecoin? What is it backed by?
So MiCA has quite strict rules there when it comes to the backing of the stablecoin. Partially, it's backed by the commercial bank deposits to ensure that there's liquidity in case people want to redeem the stablecoin. But a part of this is also in high quality liquid assets. So treasury bonds, different kind of instruments with relatively low risk and also quite liquid on the market. So there are also different rules if the stablecoin issuer is a significant one, So then these proportions change a bit. But in general, MiCA provides quite strict rules. And some also think that this might be too strict for the issuers because it's harder then to justify the business model. But at the end of the day, kind of the goal of MiCA was also to bring more consumer protection into the whole space and also to ensure financial and market stability.
What does being MiCA compliant actually mean in practice, besides the things that you have already mentioned? And how does it change the way traditional banks can participate in blockchain innovation?
Yeah, so MiCA is definitely unlocking a lot of opportunities for banks. Banks need regulatory clarity in order to enter a certain area. And we see that there are already developments on that. Maybe first to look at the general kind of what MiCA unlocked is definitely more issuances of e-money tokens. So I believe that now we're at around 20 e-money tokens here in Europe.
And e-money token is one of the terms as defined by which was included in MiCA, right?
Exactly,
So, yeah.
exactly. So basically, this is a European regulated stablecoin. Is called e-money token. Most of them euro denominated, some of them US dollar denominated. There's also one in Czech koruna. So definitely some more movements there. Then MiCA also regulates asset reference tokens. From this perspective, I'm not completely sure that there are any on the market. At least I haven't seen them yet, but there are also plans to issue those tokens. And thirdly, what MiCA also regulates is the services that these crypto asset service providers provide. So such as custody, trading, exchange services, broker, advisory services. These are all regulated services now. And I have seen also in discussions with the other banks that they are very, very keen to explore the opportunities. I think that so far there has been a lot of experimentation, but now we're finally entering the stage where more and more projects will go live. So I think in the next year, you will see that a lot of the banks will start offering crypto, will start we'll get the custody license. I think that this whole space is maturing, and this is definitely also partially because of MiCA.
On the tech side, what blockchain infrastructure or design principles are being considered to ensure or provide speed, security, and compliance at scale?
This is one of the questions that I get a lot.
Yeah.
So what blockchain will we use? To take a step back, I think that the whole industry has often been divided between the public and private blockchain. And everything started with the public blockchains. But we also have to know that there were, at least at the beginning, some challenges there with scalability, with privacy, with fees, and so on. And then people started to think, okay, what if we take the best elements out of public blockchains and build our private blockchain? So kind of being confined or reserved just or limited just for certain entities. And this worked well, maybe the first year, but then they reached this conclusion that it's really hard to scale these things if you have a private environment, and that actually the innovation is happening on public blockchains. And then kind of the sentiment again shifted more towards public blockchains. And I think that there we still have some work to do. So, for example, especially the privacy element, this is something that the industry is still working on. But I believe that this is actually where most of the industry will go. I think that there is still a good case for some private blockchains and for some applications. However, I think that a lot of the activity will actually be on public blockchains.
Such as
Ethereum, Polygon, and some others. And when it comes to which blockchain the stablecoin will be based on, so here I have to say we did an initial assessment of different blockchains based on their scalability, reliability, security, developer activity, fees, and so on. And we have our initial thoughts on that. we still have a couple of months actually before we go live. So this is still somehow work in progress, and we do have a good picture what we want to achieve. But it's important to say that probably at the beginning it's going to be a public blockchain such as Ethereum or EVM compatible. But then when it comes to the mid and long term, we will also see where the demand is. Because at the end of the day, why we are providing our stablecoin is to kind of fulfill the demand of somebody else that wants to do cross-border payment or wants to settle the assets. And depending on the blockchains that these parties will build, we will also, of course, adapt. So I think in the long term, there will be multiple blockchains that we will support, but definitely starting with Ethereum or EVM compatible.
The future is multi-chain, even in the banking world.
Definitely. And I think that the standards have not been set yet, actually, because a lot of different parties from different industries are building on different blockchains. And I think that every party has a good reasoning why they are doing that. But on the other side, there has not been an agreement between the parties which blockchain should be widely used.
And how do you think the agreement could possibly be reached?
I think it's just a part of the market development. So when one party builds, when second party builds, and when you reach that critical mass of parties being on this blockchain and succeeding, then I think this will also come natural. So I don't think that there will be kind of enforcement of standards.
One to win them all, no, not the case.
Probably not one, probably a couple of them. And I think that, this will come as a natural development.
Now let's dig into use cases. Where do you see the most immediate value? Is it in corporate payments, cross-border payments, right? Settlements, supply chain finance maybe, or something else?
Yeah. So I always try to differentiate between the use cases that we have now, that we see now on the stablecoin market, and future use cases. When it comes to the use cases that we see now, I mean, most of the US dollar stablecoins is still used for crypto trading and DeFi. Store of value is another kind of use case that we're exploring. But then we see that more and more use cases are moving closer to traditional finance. Now, for the stablecoin that we're building, we definitely see the opportunity on crypto trading, because most of the cryptocurrency markets are denominated in US dollars. And there are a lot of traders coming from Europe that actually have to trade in US dollars. And they would prefer not to have this currency risk and the fees when they have to convert in the end of the day to their local currency. So we do see that there's a big opportunity also for Euro stablecoins to kind of become one of the trading pairs there. And for that, you need a very liquid Euro stablecoin.
Exactly.
So this is something that we're definitely assessing and trying to put into perspective. And then cross-border payments, at least the certain corridors outside now of the SEPA area, payments are still expensive, slow, not transparent. And we see that fintechs are already doing a really good job in addressing these pain points. So we also want to explore how these cross-border payments could also work with stablecoin, with our stablecoin. And I would say that this is a big opportunity also then for banks when they enter the scene. And thirdly, when more and more assets are getting tokenized, they will also need a cash-like on blockchain. Because if you want to do this delivery versus payment to swap the asset and money instantaneously, you need both of them to be on blockchain. So that's why this is, I think, that more of a mid to long-term use case, because there is still, the ecosystem is still developing and maturing. But definitely, I think that we're not, we and our stablecoin will play an important role in the development of this ecosystem. So the ecosystem cannot develop without actually cashless on blockchain. And then you have the maybe more futuristic use cases when it comes to agent payments, AI agent payments. I mean, this is a use case very dear to my heart because I believe that AI agents will change a lot of things, how we do them currently. And I think that also stablecoins fit very well into this kind of use cases.
Programmable money and smart contracts, right? Those are often mentioned as key enablers of stablecoins. Can you share an example of how programmable euro liquidity might transform traditional banking operations?
Yeah. So we were looking into this use case already, and we see that there are also examples on the market, how they did it. I believe it was JP Morgan doing this with Siemens, and they were using tokenized deposits, not stablecoins. But what they did is, so there was a multinational such as Siemens, and they had operations in different countries. And you could theoretically set the rules that if, for example, liquidity in one of the subsidiaries falls below a certain level, fund it from another wallet, from the wallet of another entity. If this entity does not have sufficient liquidity, fund it from a different entity. So you can start playing around with these rules. I mean, this is a very simple example, but you can make it very, very complex, actually. And this is the first time when actually also the clients have the power to define these rules and to actually execute them. So there's nobody in the bank that would have to press the button for every payment to be initiated. So from this perspective, I see here a lot of opportunity, not just for the corporates, but also for the banks. I mean, banks are also moving money around constantly. So automizing these operations would bring a lot of efficiencies. And there we see smart contracts plus stablecoins as a really good pair.
The consortium aims to launch the first issuance in the second half of 2026. Between now and then, what are the major milestones?
Yeah, so we incorporated the entity already in September with now currently 9 banks. More banks will still probably join. The next big milestone that we have is now to apply for this e-money license. So as said, stablecoins are e-money tokens, and for the issuance of that, you also need e-money license. We're applying for this license, or we will apply for this license in the Netherlands. Now we're just finalizing and polishing this application. So in the next couple of weeks, this should be filed to the national regulator there. And then next year, at the beginning of the year, we want to set up all the operations. We have already started doing that, but still a lot of work still needs to be done. We want to run some proof of concepts or some pilots to the extent that this is allowed, of course, in the Netherlands. And then the planned go live is somewhere in summer next year. So it will take us still a couple of months, but we are working hard to push the deadlines and to start issuing as fast as possible.
Do you see this stablecoin evolving into a broader ecosystem that connects DeFi, tokenized assets, and institutional finance?
Yeah, definitely, 100%. So I think that when it comes to DeFi, for a long time, DeFi was really limited to the crypto space. I think now is the first time when we're starting to see that it's coming closer and closer to the traditional finance. And why is that? On one side, more and more assets are getting tokenized, and these assets can also be used in the decentralized finance applications. But on the other side, also the technology and security of these applications is becoming higher. And the space is getting more and more institutionalized. So this also gives confidence to the banks to enter this space. So I believe that actually in the future, we won't call it DeFi, we won't call it decentralized finance, we'll call it on-chain finance. So the difference will just be that everything now is running off-chain, and we want to bring this onto blockchain in order to increase the efficiency. And I think that there we will have the crypto players, banks, institutional players, and also, of course, stablecoins as a an important pillar of this whole more liquid ecosystem.
Do you think that the stablecoin initiatives pushed by institutions, whether in Europe or on other continents, in other geographies, can actually fuel the growth of DeFi in the future in its evolved and new form?
Yeah, definitely. It's not just the stablecoins, it's also the tokenized assets that institutional players are actually issuing. If we look at the, let's say, tokenized money market funds, there are big asset managers, especially in the US, that are already doing this, that are already issuing tokenized money market funds, and then using DeFi platforms as kind of an additional distribution channel. So it's not just limited to their clients, to their existing clients anymore, but they are putting it there, out there for anybody actually to be able to buy it and to, use the tokenized, or let's say institutional grade tokenized money market funds for that. So I think it's not just the stable coins, but it's definitely also other asset classes that will help to grow this whole ecosystem and help actually to merge these two worlds.
There is a common notion nowadays that the whole DeFi, crypto industry, the whole crypto story has been created in order to help and facilitate the development of the very system, so the banking system, that it was initially supposed to, I wouldn't say oppose, but to serve as an alternative to, right? Do you think it was right from the beginning destined to just help banks do their thing in a way more programmable or flexible, efficient manner?
So I think that the initial idea of crypto was very noble and was kind of really to trying to be the alternative system to the current banking system. That especially back then in 2008, it was very, at least in some elements, very shady. But I think that the whole journey of crypto, if you look at it, a lot of people also building in DeFi, they faced the same problems that banks maybe did years ago already, because banks also do have a lot of knowledge, a lot of experience. The systems work, even though maybe they are not the most efficient systems, but they work and they're reliable. So I think that, I think often in crypto, people try to reinvent the wheel, and sometimes a lot of the knowledge is actually already present somewhere, and this is in the banks. So I think that if we manage to merge both of these worlds, I think that this is going to be the winning combination.
And both worlds can exist, right? So the DeFi, the way we knew it, and the DeFi, the way we will, as it appears, inevitably know it in the future, right?
Yes, let's see how this space evolves, because DeFi might go more into this decentralized finance direction, or it might just be part of the on-chain finance where banks will also participate. So let's see how this evolves.
This was a fascinating look into how European banks are joining forces to literally redefine digital finance and digital payments. Vid, you have given us a front row view of how RBI, Raiffeisen Bank International, and its partners are shaping the future of money, or I may say e-money in Europe, right? Thank you very much. Thank you very much for this. And where is the best place for listeners to follow your work or learn more about RBI's blockchain and digital asset initiatives?
So I do use Twitter, but I think that the best place to connect is LinkedIn, and there is also a place where I'm the most responsive, let's say.
I will include all the links in the description. So Vid, thank you again for joining me today and for sharing your perspective on the European stablecoin journey. And to everyone listening, if you enjoyed this episode, like, subscribe or follow, and share this episode with someone curious.